I think we are going to a DeFi renaissance. I think that one of the next narratives that happens in crypto will be DeFi making a big comeback.
Let's talk about stablecoins, the real killer app. Some say stablecoins are crypto real killer app. Do you agree?
I do think they're the killer app. I think they're the one thing outside of Bitcoin. So I think stablecoins are going to be the new standard. I think it's what everyone's going to be using in the future.
Let's now talk about the Coinbase to 1 trillion. So you're predicting the Coinbase to be 1 trillion company by 2030. What catalyst do you see making that possible?
Yeah, good question. So
welcome to Crypto Gist. Today, I'm very excited because we have a guest that is not only one of the owners of one of the biggest newsletters in the crypto space, but is also the head of research of Mill Road. How are you today, Kyle?
Great. It's a wonderful day here. What's going on? Excited to be here.
I'm very good, Kyle, but thank you so much for coming to the show. For the people that's watching and listening this podcast, the first time that probably heard about the Mill Road, but for me, it was a newsletter that has teaching me a lot in the last few years. But maybe you can explain before we dig into the podcast today, what is the Mill Road and what is your involvement with the Mill Road and the other company that you have as well?
Yeah, sure. So Milk Road is a media company that's aimed to help people invest in crypto and become better investor in general. Not necessarily just about crypto, but obviously that's a focus of ours. But our goal is to help people become better investors, and we think crypto is one of the best tools to succeed in investing and help people become financially free, as we see it as the future of finance. So we have a newsletter with over 300,000 subscribers. We have a podcast called the Milk Road Show. With something like 150,000 plays per month, and a YouTube channel with that as well. And then we have a pro product, let's call it, which is basically a paid product for people who are kind of more in depth and want to really understand the macro environment. They want to stand more in depth on the research and technical sides of crypto and kind of like really try to figure out where we're going here. So it's more in-depth research. And so we have that as well, which is nice. And then we also have another company called Impact 3 that I founded, which is me and my co-host, my co-founder Jay, which is a crypto native marketing agency. So we help protocols, we help media companies and brands in crypto space. We help them grow. We help them get more social. We help them get more reach and find more partnerships and et cetera, et cetera. So we're doing our best just to help kind of proliferate the entire industry.
Thank you, Kyle. And before jumping to the market and investment strategy talks, Kyle, how was your life before crypto? Like, how you ending up in this space? Of course, Crypto Gist is to talk about the people behind the Web3 and blockchain and crypto industry. But what was the life of Kyle before crypto? What you were doing before?
Yeah, before crypto, I was running a marketing agency. So the same one now. It wasn't working with crypto, obviously, in the beginning. We sort of pivoted to that years ago. But I had been in the content creation or the creator economy, let's call it, for about 10 years, kind of building businesses. And actually the thing that really, there was two things that got me into crypto. First was I was also an investor for a long time, usually in more like newer industries. So like I got in social media early on, investing in social media apps and things, marijuana stocks in Canada because it became legal here years ago. So I was like early on in that. As an investor, I figured if I was going to be investing a lot, and I knew this was a big part of my life, I wanted to really understand what was going on in this space. And so I started reading economics books. And right around the time that I had read an economics textbook, this is what I was doing on my spare time, a buddy of mine in Mexico, who worked for Exodus, the wallet provider, he had taught me about crypto. This was back in 2019. And we went for dinner and he spent hours teaching me and got me a wallet and sent me it. And I was like, wow, this is amazing. So there was that. And then also I had my own creator business in the health space, actually. And one day I woke up and my entire account was shut down on Facebook. So they basically just rugged my account, and it's still down. I still don't know why. They never told me. They just deleted it all. And I had my whole business running through that. I had a Facebook group with like 60,000 people, and I can't access any of it. Just all was gone one morning. And so when I learned about crypto and about the idea of like owning your own data, owning your own accounts, et cetera, it immediately hit me. And I was like, oh, okay, this is more than just money. This is going to transform the whole internet. And I really see that. And so I kind of like from that moment, I was like, okay, I'm going all in on this, and started pivoting my companies there and started building more and creating more companies in the space.
So you went all in since 2019, and another crypto years on board. And this is probably your second bear market. We get to there because I've been watching a couple of your podcasts, and everything that you've been calling is been very precise. So all these books of economics that you have read in the past is paying off. But you also develop a reputation for calling big market moves. Can you walk us through your process? Like, what macro or on-chain signals do you trust the most when making like high conviction, let's say, bets?
Yeah. So the big thing for me is trying to understand what controls crypto assets. And in my opinion, that's the business cycle and the liquidity cycle. And in fact, that controls basically all assets in this world. We live in a world where everything is dominated by monetary or physical stimulus, right? Governments are, obviously more and more in debt and getting more and more in debt every single year. And they're debasing our currencies. And when you debase a fiat currency, things that are scarce go up in price, right?
Mhm.
And so that could be real estate, that could be tech stocks, that could be crypto, and so on. And so what I look at is if you can understand the economic cycles, meaning the business cycle, and ultimately from that the liquidity cycle. So when you understand when governments are going to print more money or when they have to print more money, then you can start to understand when big price movements are coming, and the opposite, right? And so if you look back at from the beginning of time from crypto, they've always followed. Everyone thinks that we follow the sort of Bitcoin halvening, and I think that's actually untrue. It just happens that Bitcoin was started right at the time that the great financial crisis happened, which at the same time is when governments started printing a lot of money and going a lot in debt, right? And so if you put a global liquidity chart up with the price of Bitcoin, it's almost the exact same. It's like correlated to a T, and it has been for like 15 years. And same with the business cycle. If you look at something like the ISM, which is an indicator that shows where we're at in the business cycle, every time the business cycle goes up, we see crypto prices go up, and every time the business cycle down, we go into a bear market. And so those are, I don't try to time the markets in terms of like on a short-term basis. Like I have no idea what's going to happen tomorrow. But when you use the business cycle in global liquidity, you can start to understand the bigger movements, right? And again, these are more, let's say, medium to long-term movements. And so that's kind of how we at Milk Road really look at the investing landscape here in crypto, is trying to match our investments to the business cycle, to the liquidity cycle. And when we think both of those are picking up, it's more of a time to go more risk on. And when we think those are coming back down, it's more of a time to go risk off. And so that'll alter our portfolio or our recommendations based on those things.
Okay, but that's like, let's say traditional markets have a clear business cycle, yeah? Business or liquidity, but crypto moves totally different, especially this cycle. Nobody knows what's going to happen. I also was looking one of your podcasts in January, and you were talking about something's going to happen in March and April, obviously after people paying tax in the US and Trump elections, and now he's in power, et cetera, et cetera. But where do you think we're in the crypto market cycle right now? How should investors position themselves accordingly?
Yeah, we're in a difficult position right now, actually, a little bit different than in January. What I was explaining was essentially generally in March, we see pullbacks. And that happens because a lot of people are taking profits to pay their taxes, right? Now we've kind of had that in March, although I don't think that's really what's going on today. Things have changed. The game has changed a little bit. So generally, I would have said we are kind of in the middle or kind of near end of cycle. Both business cycle, liquidity cycle have been picking up. And crypto's done quite well over the last few years. Obviously, some tokens better than others. But in the grand scheme of things, if you look at the total crypto market cap, we've done very well over the last few years. And my original thesis was, okay, probably around the end of this year, we top and we go into another bear market. However, we're in a very different place right now. And that's because of some moves that I think Trump and the administration are doing in the US. And so basically, when Trump took over in January, he had a difficult decision to make, which was there's $9 trillion of US debt that needs to be refinanced in 2025. And the problem is that rates are extremely high right now, at least compared to when they first created this debt, which was back in 2020 when rates were near zero. And so if they are to refinance all this debt here in 2025 at these rates, it's going to accelerate the debt spiral that the US has. And it's probably going to mean some really bad things for the US in the later part of Trump's presidency. And so I think that over the last month or so, they've really changed their tune and they're going a different strategy, which is they want to try to tank markets right now and tank the US economy right now, not necessarily markets, but more the economy. They want to lower the dollar. They want to lower inflation. They want to lower growth so that rates can come lower so that they can refinance their debt. And so I didn't quite realize this back in January, but now I'm starting to see it, which is I think they're purposely trying to make chaos in the markets. And so I think I don't think we're going to a bear market right now, which I know is getting a little bit louder. And so people are starting to think this on Twitter. I don't think that's happening, but I think we are in a more extended pullback from what I originally thought we would have at this period. I thought this would be more of a short one originally. Now I'm realizing actually the government is kind of pushing this and they want this to happen and they need growth to come back even further. Ultimately, I think this means really good things for the crypto market in the coming year to 2 years, instead of maybe the cycle ending, Q4 2025. I actually think we're probably going to extend into 2026 now. They're almost like resetting the business cycle in the middle of a business cycle, which doesn't generally happen. But we're doing it at much higher prices. So this means maybe we can go even higher from what we originally thought. So I'm short term, I guess, a little bit bearish, but more medium to long term into the end of this year and especially into 2026. I think we're going to see really, really good things in the space. So for those that are patient, I think it's going to be a great time. But I know, especially in crypto, it's very hard to be patient.
No, but well, especially when the market is like this and people don't know much about what is happening. That's why it's so important to go to people or to sources that have very good reputation or have been here in the long term. I think so. That's one thing that you have done in the Mill Road, which is very fascinating, receiving those emails every day. But yeah, I agree with you. This cycle is totally different. When I start Crypto G's at the end of the previous bull run, it was after FTX happened. I actually start Crypto G's in October 2022 when FTX happened, and then I start to build, and then start to do podcasts, right? And start to educate more people. But then, obviously, we saw a couple of good news, let's say in the last 6 months, 7 months. People got excited, right? And now we have more people into the industry. But I think so also the people that stay here for just short time, let's say since the previous cycle to this cycle, they start to losing hope. But I think the people that been more than 1 or 2 cycles, they know how this plays, and of course hoping for the best. I'm talking about hoping for the best. In that podcast that you did in Mineral Podcast, you talk about you are not selling. They say I'm not selling. I might sell something in April, March, 30% of my portfolio, and then keep some on stables, and obviously keep 50% in my assets. Is that still seeing the case? Are you not selling, or are you still thinking to go with that 30%, or that has changed?
I haven't sold. The only thing I've done is I've taken a little bit of like my risky altcoins out because I think, again, we're going to have a little bit of probably extended chop here, which generally doesn't do well for altcoins. But otherwise, like, and by the way, my altcoin positions are like a couple percent of my entire portfolio. So they're very meaningless to me. Most of my assets remain in majors, and I continue to do that. I'm not selling any of those right now. Will I sell in April and May like I originally thought? I'm not sure. Again, I thought we would have a pullback at the beginning of the year, which we did have. And then I thought we would take off in like Q2 and we'd kind of run into April, May, do quite well, and then get a pullback for summer. Now that still could play out. I don't know. Like, obviously we haven't got through April, May just yet. So who knows? My assumption is maybe that doesn't happen now. And so still continue to not sell. I actually think this is a great buying opportunity. As you said, there's been a lot of really good news in the crypto space over the last few months. And none of that is really priced in anymore, right? Like, it's basically crypto's become legal in the US. All the SEC cases that they had against some of the biggest companies in the US are kind of gone now. All these new rules and regulations are being put in place so that banks and institutions can like hold on to this stuff and build in this space. So like a lot of good things are happening, but right now the prices of crypto are being held down by macro, by this growth scare of Trump and the administration, which is fine. It is what it is. Nothing we can do about it. And so I think whenever the macro does fix itself and we kind of move forward with the business cycle and we move forward with global liquidity, I think crypto is going to do really well. And so to be out of the market here, to me, just doesn't make a lot of sense. Does it make sense to be buying meme coins and like super high risky tokens? Like, Probably not. We're going to need to wait until macro starts to clear itself out before we get back into that world. And that could take a bit of time. So not really taking profits here, just kind of sitting on my hands, being patient. I will buy, especially if we dip in Bitcoin anytime it comes into the 70s. I'm a big buyer there. And so we'll continue to do that, and we'll see how long this takes to get out. But otherwise, no, continue to wait. I think the cycle continues. I think the bull market continues. We just got to continue to be patient.
So that I like about what you say in a couple of the podcasts, Kyla, you keep it real. For example, it's not like people in other channels, they say, buy Bitcoin. Everybody is going to be rich. You're very like conservative. You say, yeah, you can take some profits, and you say you can buy, property or your car. But also you say about something that I believe is true. People just go and relax during summer. You see July and August, all the millionaires and billionaires in Saint-Tropez, Monaco, in all the Europe and America taking time off. So there's something that I agree with you. One thing, being real, you're in the crypto space, you have to be careful, don't go too crazy and don't keep saying Bitcoin to the moon, because this is the industry right now changed a lot. And talking about Bitcoin going to the moon and about companies going to the moon, let's say, you also talk about something very interesting, that the FAT App Thesis. So you say your investment thesis revolves around the FAT app. So can you break it down for people that doesn't know what it is, and what do you believe application will capture more value than infrastructure?
Yeah, sure. So for the last 15 years in crypto, most of the value has accrued to blockchains, right? Block space has become this really exciting product that exists, that's kind of changing the internet. And so it's had its moment for the last 15 years, right? And obviously, Bitcoin, and then it was Ethereum, and then Solana and BNB and Tron, and all these assets have done quite well. And so a lot of people actually talked about the FAT protocol thesis. And when we say FAT, what that means is like, where does all the value accrue? And the more that a value accrues somewhere, you could call it something. It's a fatter protocol or a fatter app. So for a long time, it's been all about the protocol. And I think we're beginning to reach a point in crypto where, again, you just said the cycles are changing. I think so too are where people are going to start investing in the space, because I think what's happening is, for the first time, we actually have real apps, and apps that generate real revenue, that have real users, they have real product market fit. Those apps could be stablecoins, it could be DeFi like Maker or Sky or Aave or Athena. It could be deep in things. It could be whatever, right? There's tons of apps. Coinbase, Kraken, these are all apps as well, in my opinion, in the crypto space. And they have a lot of users. They have a lot of revenue, et cetera. And for a long time, we haven't had that. And so again, all the value just went to ETH. It went to Sol. It went to these L1 tokens. But now we're reaching a point where the apps are beginning to have all the leverage, because the tech and the infrastructure is getting so good now that apps can go launch their own chains if they want to. And we're starting to see that trend happen. Coinbase, which has been the biggest, let's call it, application in crypto for many years outside of Binance, what do? They launched their own chain in Base, right? If we look at Uniswap, the most successful app in crypto today, they've launched Unichain. Athena, one of the breakout apps of last year, they're looking at launching their own chain. Jupiter, the breakout app on Solana, they're launching Jupiter Chain. And the list goes on and on and on. And so we're starting to see a trend now where apps that already have users and already have revenue, they are going to a place where they want to launch their own chain, and they want to, instead of leak value to the protocols, they want to take that value themselves, right? And it makes sense, right? This is the incentive of these businesses. They want to go and they want to create their own block space, and they can do that now because the infrastructure is there, where it's quite easy to launch your own chain, whether it's an L2 or a subnet on Avalanche, let's call it, or using Celestia or whatever it is. Okay, there's many options. And so I think what's happening is, and this is how it worked with the internet as well. So if you look at the way the internet works today, most of the value doesn't accrue to the infrastructure. It accrues to the applications. Facebook, Google, Amazon, right? These are the internet apps. They're trillion-dollar companies, right? And it's because they have the users. And so they can go and use that leverage to bargain prices with all the infrastructure. So they can go and say, hey, I'll use your cloud, or I'll use your whatever, if you charge me less than what this competitor's doing, because I've got 3 billion users in Facebook's case, right?
Yeah.
And so the infrastructure plays like, sure, all right, I don't have the users, I don't have the power here, I don't have the money, you do. And so they get to control the market. And for a long time, crypto was not that way. It was only protocols controlled everything. But now that it's getting easier to launch your own chain, the apps are beginning to launch their own chains and take the users with them. And so they can now they now have the leverage. And if you look at what chains are doing today, Solana, Ethereum, every L1 that's out there, even all the L2s, the general purpose ones, they're all fighting to lower their fees. They want to bring fees down as much as they can so that apps will come there and users will come there. Whereas if you look at things like Maker, their revenues are just going up every single day, right? Wow. They now make like 200 million annualized revenue because they just go to chains that are cheap and they can charge revenues for their products because, again, they have the users. And so this is the idea of the fat app thesis, which is applications that actually have users are going to start to accrue a lot of value. We've never seen that before. And the interesting part of this is if you look at the market cap, market share, I think about 75% of all of crypto is in layer 1 tokens, right? Yeah. And so that means there's a massive opportunity. If the revenues or the value is all going to accrue to these apps, but everyone is allocated to L1s, at some point we are going to see, I think, a redistribution of capital going to the apps. Now, I don't think it's going to happen right away. It's still going to take a lot of time, but I think we're slowly going to start to see it. And so I think apps with real revenues, with real product market fit, and more specifically, apps that are buying back their own tokens with that revenue are going to start to do really, really well. And these are the fat apps that I'm talking about.
The fat apps.
And so, yeah, you have a question?
No, it's also or apps that is taking their own tokens as well, right?
Yes, apps that are buying their own tokens. Now, the interesting thing is no one was really doing this previous to Trump taking over. Maker had done it once, and they did quite well in those moments where they're buying back their own tokens. But people stopped doing this, and protocols stopped doing it because they thought it was illegal. They were going to get sued by the SEC if they were buying back their own tokens because they'd be considered a security. Now, with Trump taking over, the SEC dropping all their cases, we're starting to see Athena, Aave, Maker, all of them are putting up proposals to start buying back their tokens again. And this drives revenue to the token holders. And so I think we're going to start to see this trend continue as well. So not only are apps going to be making more revenue and launching their own chains, they're also going to be buying back their own tokens. And this changes everything because before this, no one really wanted to hold a lot of these altcoins because they were just useless governance tokens. They didn't do anything, right? Now they actually are accruing value, or at least they're starting to. Again, most don't. So don't get me wrong. This isn't like every altcoin is up for grabs here. It's very few are starting to buy back their own tokens. And I think that's going to be a trend we're going to see for the rest of this year and moving forward. And so I think these assets are going to start to accrue a lot of value, both in revenue and in capital.
Guys, but also remember, everything that we're saying here is not financial advice. You have to do your own research. Very important. And Cal, something that just got my attention talking about super apps, or the fat app thesis. The last 6 months, let's talk about Phantom. Phantom is a wallet of Solana. I'm not endorsing it, but I find fascinating that 3 people in my life very close to me, new generation. One is my nephew, he's 18, and 2 more people, the daughters of one of my good friends. I was talking about crypto with them, and straight away, they didn't mention Bitcoin, they didn't mention the exchanges. They said, yes, I have Phantom. In fact, my nephew, for his birthday, he said, Uncle, if you want to give me something, send me some Solana. Here is my Phantom wallet. And this is the new generation. These people don't understand anything about crypto, Bitcoin, but they hear about Phantom. It got popular because of the meme wave. So I think so. I want to get more into the fat app thesis. It sounds very interesting to see what is going to pop around there. I'm talking about wallets. Let's now talk about the Coinbase to 1 trillion. That's your other prediction. That's quite bold. So you're predicting the Coinbase to be 1 trillion company by 2030. What catalyst do you see making that possible, and what risk could derail that vision of Ben?
Yeah, good question. So there's a bunch that we can talk about here on Coinbase, and I'll start it by connecting it to what we just said with what you were saying with Phantom Wallet. When people think of apps in crypto, they often think of like DeFi apps or like these on-chain apps. And those are apps, sure, but I actually think the best apps or the most successful apps are the ones that control the UX, the user interface, right? The user experience. And that is your Phantom wallets. As you said, someone just came into crypto and they know Phantom as the brand. They don't know Ethereum or whatever, right? And I bet you that they do a lot of their swaps on tokens in Phantom. You can do that right in the Phantom wallet, right?
Yes.
Which again gives Phantom leverage to go to Radium or Jupiter or any other DEX and say, hey, we'll integrate your DEX and use your DEX, but you have to lower our fees. So again, Phantom Wallet, this is the fat app thesis. They have the leverage because they have the users. And so they can go to these apps or these dApps, let's call it, these on-chain DeFi protocols, and they can ask them to be, lower their fees to them because they have the users, right? So that is the fat app thesis right there. Coinbase is probably the best suited to take advantage of this. So let's talk fat app thesis first with Coinbase, and then I'll talk about why I think Coinbase is going to be huge. So again, Coinbase owns most of the users, at least in North America. I think they have about 10 million active users. If you look at the rest of on-chain, yes, I know we have active addresses in the like hundreds of thousands, but most of that's not real users. That's just bots or even AI agents, et cetera, or people with multiple wallets. Yes. So Coinbase has tons of actual real users. And one of the moves that they made just recently, and again, I think this came because of the SEC dropping all their cases, is Coinbase just recently integrated Morpho, which is a lending app on Base, into the Coinbase app. Now, what's really cool here is users that are on Coinbase, and remember, there's a lot of people in this world that use centralized exchanges, but haven't quite came on chain yet. They don't have a wallet like Phantom, right? And so there's this kind of gap between the people that are on centralized exchanges and people using DeFi products or like on-chain products. They don't really jump to that chasm yet. They haven't made it through that gap. And so what Coinbase has done is said, hey, instead of you coming on chain, we'll just bring the on-chain apps to you, to the user, right? So they brought Morpho, the ability to lend out your Bitcoin and get USDC in return, right into the Coinbase app. And so again, if we think fat app thesis, Coinbase owns the users. They went to Morpho. They said, hey, we're going to integrate your app. Now what can they do? They can go to Aave, the competitor of Morpho, and say, hey, if you do the same service that Morpho's doing, but you charge half price, we'll use you instead of Morpho, right? And if Aave says yes, they'll go back to Morpho and say, hey, Aave is going to do this price. You got to give us this price or lower, right? And you see where the leverage is. The leverage is where the users are. And so Coinbase, being the most trusted brand and one of the most used brands in crypto, they really benefit from that fat app thesis. So that's one sort of like big moat that Coinbase is building there. And I think they're about to start integrating a lot of on-chain apps into the Coinbase app, which is going to be really cool. The second thing I think about Coinbase that makes me so bullish on them is they remind me a lot of Apple in the early days of the internet. And the reason I say that is Apple had computers to start. And then what Apple realized was that the internet was going to be the big thing. Okay. And they realized everyone was going to use the internet to do things like watch music and watch, movies and do whatever else, message each other, communicate. And so what did Apple start to do? They started to build products for all these different things. They had, back in the day, they had iTunes. Now they have Apple Music instead, but they had iTunes, right? They had, and they still today have Apple TV. They have iCloud because they knew people were going to need to store things. They have iMessage, right? They have basically everything we do on the internet. They've created a product for, essentially, right? And they've connected all those products. And so now it's very seamless for me to connect my phone to my laptop, and I can use my iMessage on both, and I can send pictures using my iCloud on both. And like everything kind of works together. And so they made the internet experience very easy for a lot of people, right? Like if you go to Samsung or Google or other products, they're probably better. What's that? Yeah, they're more difficult though, but they're probably better, meaning you can do more features, but they're way more difficult. Everything is so seamless in the brand of Apple. It's also like it's all branded the same. So everything I do on the internet, if I'm using Apple products, it's all looks and feels the same. Safari, etc. I think Coinbase is doing the same thing. So Coinbase started with just an exchange for Bitcoin. You want to trade your fiat into Bitcoin, that's all you could do. They then realized, oh, this is going to be a lot more tokens. There's going to be these smart contract platforms. We're going to do so much more. So they added a bunch of other tokens. Okay, they did quite well in that world. Then they realized people were going to go on chain, right? It wasn't just going to be in the exchange. So they launched Base, and they launched Coinbase Wallet, and they launched Coinbase Commerce, and they've just like consistently launched more and more products, and they do it almost every few months. They're launching a new on-chain product. And now you can start to take your journey from having fiat, putting it into crypto, and then doing things on chain, and never leave the Coinbase brand, never leave the Coinbase like ecosystem, right? And that gives a really, really strong moat to Coinbase, the same as Apple had. They can start to charge whatever fees they want, the same as Apple does, right? They can start to turn off fees in some areas. Like they could technically turn off fees right now on their centralized exchange and instead just monetize from Base in other ways, right? And now other companies can't really compete with what Coinbase has because they're building almost a monopoly on the on-chain world. And so I think that's similar to what Apple did back in the day. And so I really see Coinbase starting to do the same thing. And so as more and more people come on chain, I think that only is going to grow Coinbase's ecosystem. and no one is really set up better to basically maneuver through these markets. Like obviously crypto moves fast and things change all the time, but Coinbase is a crypto native company. And so they're kind of always ahead of the next move. They're always kind of first there. Whereas if you look at like, I don't know, Robinhood, who's also competing with Coinbase right now, they're sort of like trailing behind. Banks even farther behind, right? Coinbase is kind of leading the charge, whereas everyone else is kind of trying to catch up, which is exactly what Apple did. They invented music online, right? With iPod and iTunes. They invented the next thing and the next thing and the next thing, the iPhone, for example. And so Coinbase seems to be positioned to be doing that. And so I just think, I think their positioning is really strong. Their ecosystem continues to grow and they're kind of building a monopoly. And then, to be honest, with Trump winning and basically relieving all the scrutiny and the scare around building in crypto in the US, that's kind of like freeing Coinbase to really like set off and like do whatever they need to do, which they weren't allowed to do before. So I'm really excited for what Coinbase is going to do. And I think in the coming years, they will continue to grow and become one of the biggest financial companies. And one last point, and then I'll throw it over to you, is in the financial space, the thing that matters more than anything is trust, right? The biggest companies in the world, in the finance world, like banks, they become that because they get trust. And Coinbase right now custodies something like $410 billion of crypto, which is like 15% of the entire crypto market cap. So they literally hold 15 to 20% of all the crypto that exists. Wow. Michael Saylor, who custodies his Bitcoin? Coinbase. BlackRock, who custodies their Bitcoin and their ETF? Coinbase. Every single big company in the world uses Coinbase to custody their crypto. That is a massive moat in the financial world that I don't think people quite realize. That's not going away, right? When all the other big companies come in, they're going to continue to use Coinbase because they already have that reputation. It's a hard thing to get, and they've really earned that over the last, I think they've been around for like 12 years. So there's just a lot of moats that Coinbase is currently building that I think a lot of people are sleeping on. And so I think it's a $50 trillion or $50 billion asset right now, maybe even less because of the markets. I think we just see multiples out of this company.
That's crazy. And something that's also insane. I was just looking through my data on Coinbase. Actually, it was Coinbase my first wallet when I used to live in the UK in 2016. And I bought my first Bitcoin in Coinbase using credit card because I didn't have enough money back then to buy. Now it's more difficult to buy one Bitcoin. I bought it at 320 pounds. That's like $500.
Wow,
and now thinking that my nephew is telling me about Solana, and now you tell him about Coinbase, the 1 trillion company. It doesn't make it actually makes sense. It could happen. And what you talk about, obviously, this is another company, but Binance compared to Coinbase, because Binance, the one of the biggest, firms in the UAE, they just bought $2 billion worth of their company. What are your thesis about Binance? Because it's another company that's too big. They went through, the SEC, and then they made peace, let's say, with the American government. But how you see Coinbase compared to Binance or vice versa?
So Binance is a beast. They are like, I think their volumes are like 10x as big as Coinbase's, which is they're 10x as big as bigger than their next competitor, which is unreal. I think they're an absolute beast of a company. They do like trillions of dollars of volume. It's actually crazy what they're doing. The problem is, one, we can't invest in them. They're not a public company. And it's not transparent. I don't really know what's going on there. Now, I don't think Binance is doing anything bad, so there's nothing wrong with that. But I can't see what they're doing. Whereas Coinbase has to like release their earnings every 3 months, and so we can see where their revenues are, what they're building, what they're doing. Binance, I have no idea. The other thing I would say is like, so globally, Binance is crushing it. They're quite well known. I just find when I look at what Binance is building on chain versus what Coinbase is building on chain, I'm a lot more bullish on what Coinbase is building. And the reason is, so Binance also has their chain in BNB, but like, I don't see them as really pushing the limits of the on-chain world with BNB. It kind of was just like they copied Ethereum. They literally copy pasted that code. It exists. It's a very centralized thing with like, I don't know, I think there's like 18 validators for BNB, maybe not even. And like, they're not really building anything like innovative or net new. Whereas what I see Base is doing is they're really innovating in this space. They're pushing the space forward. Binance, I'm not sure. Maybe they are, and I just can't see it. But it just feels like they're capitalizing on things, but they're not really trying to push the space forward in terms of innovation. So So, and then, I mean, honestly, I can't invest in Binance. So I have less of an opinion on Binance, but like, they're a beast. They're the biggest company in crypto by a long shot. One of the biggest companies in the entire world. And no one really knows it because they're this kind of like black hole that no one understands what's going on. So I'm bullish on them, I guess, but I'm also very scared for what they could do to this industry. So
Okay, I like your honesty, Kyle. I'm talking about honesty. Actually, the team they just pinned something on the DMs because I say Coinbase and the vision of Ben, but I got confused. It's the vision of Brian Armstrong.
right.
So thank you so
Yeah,
much to
right.
the team to picking this up. I'm talking about vision. I'm talking about the future. Let's talk about narratives and emerging trends. Let's start with the future of AI, agents, and crypto. So AI, I'm very bullish in AI myself. Is becoming a dominant theme in crypto as well. Do you think AI-driven trading, bots and agents will democratize investing or create an even bigger advantage for insiders?
Yeah, great question. Look, I'm very bullish on AI as well. I'm less bullish on AI agents in crypto currently, meaning I think that the AI agents that are being built in the like non-crypto world, so just like let's say on ChatGPT, in
Yeah.
OpenAI or in Grok, etc. I think they're much farther ahead than what we're doing in crypto. I think we have less strong builders here in crypto in the AI space, and we're sort of just like we're playing catch up to what the real AI space is doing. And so I think a lot of the AI agents that exist in crypto right now are actually not super useful. Like if you watch them tweet and stuff, they're not that helpful. They just tweet a lot. And so sometimes they get some things right and often they get them wrong. And so like, I think we're still a little bit of ways away from AI agents really, one, understanding markets, and two, managing people's portfolios, at least in a large amounts. I think where AI agents fit now, or at least will soon, is like we tell the AI agent, hey, I want to, put 30% of my portfolio in stablecoins that are yielding, whatever amount. Like, can you go find the best version for me? And like maybe they can go search them out and then do that for you. But like, will they just go and trade around your portfolio? That's never seemed to work yet. And I think we're still a little bit of ways away from the AI being good enough to do that. So in the short term, I guess I'm more bearish on AI agents in crypto, but in the long term, I am very bullish. Will that democratize finance? That is yet to be seen. I don't know. I think we're going to have to see how this all plays out, because if we do get an AI agent that actually works and can go and beat everyone else in terms of trading and investing, well, then everyone's just going to use that thing. And then what happens to markets? Like, what even are markets at that point? Do you know what I mean? Like,
Yeah.
does anyone have edge anymore? Like, I don't think so. And so that's going to be a very weird dynamic. Now, thankfully, I think we're still a bit of time before that happens. But when it happens where an AI actually becomes better than everyone else at investing, is it the end of markets? Like, I don't know what happens there. It's a thing I continue to think about, and I can't quite wrap my head around just yet.
Yeah, maybe we'll have a Bitcoin billionaire or trading billionaire AI agent with a bunch of tokens in his wallet, but nowhere to spend.
Yeah, right. Yeah. I don't know how it's going to play out. It's going to be weird to watch, but I'm excited to watch it for sure.
And also, you've been also talking about DeFi a lot. So, do you think there's going to be a DeFi revival after went through, it went all the way to the top and then bust? And what's going to happen with the future of DeFi? Do you think it become mainstream again or no?
I don't know that mainstream's the right term, but I'm very excited for what DeFi is going to do. And I think the reason I say not mainstream is the average person's probably not going to use DeFi, just like the average person today doesn't do a lot. Like the average person barely even invests, right? Like most people you talk to don't really invest, or if they do, like they buy the NASDAQ or something, right? They're not like leveraging and using derivatives and like taking out loans, et cetera, other than like a mortgage or something. So mainstream people, I don't think will use that, but I think who will is institutions. I think they are just like waiting, chomping at the bit to use DeFi because they love the 24/7, the permissionless aspect. They love all the yields that exist in here that aren't just treasury yields that exist only in the TradFi space. So like, I think institutions are really excited, and the TradFi people are really excited to use DeFi. They haven't been able to, again, because the Biden administration, the SEC, that has changed. And so I think we are going to a DeFi renaissance. I think that one of the next narratives that happens in crypto will be DeFi making a big comeback. A lot of this off the backs of stablecoin adoption. If we look at what's happened over the last couple of months here, prices have gone down only since pretty much December. But if you look, stablecoins have been up only, right? They're bringing like
Yeah.
$5 billion on chain every single week right now in
It's
stablecoins.
crazy.
It's wild how fast they're growing. And I think that there's a lot of DeFi protocols like Maker or Sky. There's Athena, there's Aave that are all part of that, whether it's, you know, taking out loans to get stablecoins, whether it's to mint stablecoins or use stablecoins with yield, et cetera. And so I think corporations, institutions, they're going to love this stuff. They're going to want to use this. And retail, maybe not, but the big money comes from institutions. And now they finally have a green light to use this stuff. And as institutions or corporations come on chain, are they going to use like, you know, this AI agent that was launched like last week, or are they going to use DePIN that just existed, like started like 2 weeks ago? Like probably not. They want the things that have been around. They've been battle tested. They've, you know, proven that they have product market fit. They've been audited, et cetera. And the only industry in crypto that has that is DeFi. DeFi was the first industry that came about, started back in like 2018, really had its moment in 2020.
Mhm.
It's been through that big crash of FTX, as you said, that when you started this company. So like it's been through multiple like cycles and iterations at this point. So it is now like trustworthy. It's strong. It's resilient. It's got billions of capital, especially on Ethereum. And so also their tokens, for example, they're not where they have like 10% of their token supply on the market and the rest is like hidden and held by the team. They're almost fully diluted at this point, fully out there. And so those products make a lot more sense for institutions and for TradFi people. And so I think when they come into the space, which will probably start this in next year, they're going to look to DeFi because one, they want to use it. Two, because it's the only thing that they'll actually put meaningful amounts of capital into. And three, their token structures and their tokenomics actually make sense and work, right? They're not going to come buy some random AI token that like is 95% owned by the team, right? And they're going to be selling on them every day. They're smarter than that. And so I think DeFi will have a big moment as a result of all these things coming together. And as I mentioned at the beginning of the show, token buybacks. The only protocols in crypto today that are generating enough revenue are DeFi protocols, right? Aave and Maker and Athena, they're making tens of millions of dollars a month, right? And they can use that money to buy back their tokens. And there's really no other sector that can do that. AI and crypto, they're not really making any revenue right now. DePIN starting to, but not a ton yet, right? Meme coins, nothing other than pumped up fun, right? So like to me, I think it does have a renaissance because of those things.
Amazing. I'm talking about company making profit and being sustainable. Let's talk about stable coins. For example, you know, Tether report having 118.4 billions in reserve, including 5.3 billions in next reserve. And in the second quarter of 2024, the company achieved profit of 1.3 billion. So it was the most profitable company in crypto last year. Let's talk about stable coins, the real killer app. Some say stable coins are crypto real killer app. Do you agree? How do you see stable coins evolving, and what impact will regulation have on them?
Yeah, I do think they're the killer app. I think they're the one thing outside of Bitcoin, so decentralized money and store of value. The one thing outside of that crypto's really nailed and has found like real product market fit. Everything else is still somewhat speculative. We're still not sure. Does it work? Does it not work? Is it going to remain like? We're not sure with everything else, but stablecoins are for sure here. And why? It's because it solves so many problems for so many different people. I think the first thing that really stablecoin adoption came from was people outside the US that live in countries where their currencies are failing, or they are not allowed to have access to dollars. You said you're going to Argentina. To try to get dollars in Argentina is very difficult, right? Like it's actually was illegal for a while there. They would tax you like insane amounts. And yet their currency was inflating at 200% a year. It makes no sense. And this is true in Turkey. This is true in Lebanon. This is true all around the world. Venezuela. Oh yeah, Venezuela is terrible. And so this is happening all over. And so people want dollars, but it's hard to get dollars in the traditional world. It's expensive to send dollars from the US back to your families in whatever country you are. Stablecoins fixes all that, right? It's just freely moves. It's dollars that freely move across the internet. It's basically free to transfer. It happens immediately. There is no remittance fees or any of this kind of stuff, and it can go anywhere. And so USDT, Tether, has really had a lot of adoption from that. So that one was the big killer thing that I think kind of kicked it all off. The next thing I think is corporations are very global these days, right? Like, for example, we have 30 plus employees and we represent 18 different countries from our team, right? Some of them are in Argentina or Russia or places that we actually can't pay them dollars, right?
Same here.
In Russia, for example, we couldn't pay them at all because of the sanctions. And so we had to use stablecoins. And so I think corporations that are global are going to start paying, and they're already starting to see this, going to start paying their employees in stablecoins because it's way cheaper, way faster. You can just skip the whole banking system. So we already do it for about 35% of our employees, but that goes up every year. Every year, more and more people want it. So I think that is huge. Then there's also the US. They've said this a bunch of times, but they have the global reserve currency right now with the US. They want that currency to proliferate across countries all around the world. And what have they said is one of their best ways to do that? Stablecoins, right? Stablecoins literally push dollars everywhere in the world to every little corner that has the internet. Stablecoins can go there. And so Scott Bessent, the treasurer of the US, and Trump have both said that a big part of them keeping the reserve currency is through stablecoins, right? So you have corporations, you have people, and you have the government all wanting this. And then the last thing I'll say here on stablecoins real quick is people want yield on their dollars, right? Now, if you're American, that's easy. You can just buy a US Treasury and you can get, right now it's I think 4.3% or whatever on your dollars, which is great. Eventually, those rates will probably go down. As we talked about at the beginning, that's the goal of Trump right now, bring those rates down. And so those dollars are going to want to find somewhere else to get yield. And crypto is almost the inverse of the traditional world. So when the yield goes down or when the rates go down in the traditional world, generally people are more speculative. They buy more assets, they take out leverage, and that's when the yield in DeFi really picks up. And so now you can own dollars, but get yield from Maker or Sky. You can do it in Aave, you can do it from different places, and you can actually get yield much higher than traditional world and still hold a dollar that is backed by a dollar. And so why would anyone hold a dollar when you can hold a yield-bearing dollar, right? Of course you'd hold the yield-bearing dollar. And I think that is starting to gain momentum as well. So there's kind of four things in stablecoins that are really starting to pick up. And then there's one more, which is just the ease of UX with stablecoins. Previously, it made sense people didn't hold it because it was just hard. Now, like Stripe is integrating stablecoins. And so like if you want to buy something on Stripe, you can actually just connect your wallet and pay with stablecoins, right? And then the merchant just gets it in a dollar. They convert it in the back end. But it's starting to become very easy to use stablecoins in different parts of the world. And that is going to be very exciting, I think. And so I think stablecoins are going to be the new standard. I think it's what everyone's going to be using in the future. And that obviously only means good things for crypto because it's going to bring more people on chain, whether they know it or not. I don't know. But ultimately, it brings a lot more capital on chain. I think I'm really, really excited for that. So I think stablecoins are going to, it's currently sitting at 230 billion, I think it was today, the supply of stablecoins. I think in the next year, that's going probably by the end of this year, we're at 500 billion. And in the year after that, maybe we're at 1 trillion and so on. So I just think we're going to continue to see that grow and grow and grow. And I think that's going to be one of the most exciting things that this space does.
And thank goodness to stable coins, because imagine we didn't have stable coins right now, everybody will be in losses.
No doubt.
Their altcoin, their Bitcoin. So thank goodness we have some stable coins so we can do everything you say, yield, pay the employees. Actually, Crypto is also in different countries, Argentina, Colombia, and Spain, and everybody gets paid also in stable coins. But now let's talk about something a little bit more bullish. Let's talk about the next Solana and 100x bets, because you publicly called Solana under $20, Coin at $38, and Maker at $900. Right now, what the narrative or token you think are going to be overlooked and could be the next 100x, if there's anything 100x coming, or just let's say 10x?
Yeah, I was gonna say, I don't know that I know of any 100x coming. So like, this is one thing that I think crypto people really need to understand, or investors need to understand, is that if you want the big gains in crypto, because there are massive gains to be had in this space, you have to buy those things in the bear market. You can't come in halfway or 3/4 of the way through a bull market and expect to get 100x. But that's what most people do, right? People FOMO in at the top of every cycle, thinking that they're going to get a 10, 100x, and then we go into a bear market, right? It happens every single cycle, and it will happen this time too. And as I said at the beginning of this podcast, we're probably at least halfway, if not more, into this cycle. We've already had 2 years of kind of up only in crypto. So like Bitcoin's not going to 100x, and ETH and Solana, they're not going to 100x anymore. You can get a few multiples on these now. There's still a good opportunity. But like the 100x's are a bit far-fetched. unless you're like gambling in meme coins and you happen to catch something randomly, right? But that's gambling, not investing.
Yeah.
But the one thing that I am very excited about recently is a token called TIA, or it's the protocol is called Celestia. And now this was one that was really popular in 2024, early days of that. When they first launched, they launched a big airdrop. People were really excited. Everybody like retail FOMO'd into this thing, and it went up to $20 and from $2, and then now it's all the way back down to like $3. So people got burned on it. A lot of people hate it. That's the best time usually to buy a token. When everyone hates it, when everyone calls for its death, that's the best time to get in, right? Like when FTX collapsed, everyone's like, crypto's over, like it's done. And that marked the very bottom. If you bought when FTX collapsed, Bitcoin was at $16,000. Today it's at whatever, 80,000 or something, right?
And Solana was also very cheap.
Yeah, Solana was $8, $8 at that time, which is crazy, right? Look at how good you would. That's your 100x opportunity.
Yes.
And so Celestia kind of has that same vibe. And yet, when I talked about the app, the fat app thesis earlier, I mentioned that I think a lot of apps are going to launch their own chains, right? So once they get product market fit and they get revenues, they'll probably go and launch their own chain, whether it's in the form of an L2 or some form of an L1, whatever that is. That's I don't know, and it'll be probably a bunch of those. And I think that's the point where we're hitting right now, is they're all starting to do that. Well, every chain needs to post its data somewhere. Okay. This is going to get a bit technical, but I'll keep it super simple. But chains all have to post data somewhere. Right now, most of them, at least L2s, do that on Ethereum. They post it on what's called blob space or Ethereum DA. But that is almost 1,000 times more expensive than on Celestia. Celestia has basically built what Ethereum is trying to do, but done it at a much, much, much cheaper way. And we're starting to see a lot of L2s use Celestia for DA instead. And as more apps launch chains, I think they'll still use Ethereum DA for some, and some will use Celestia. And so I think Celestia has a potential to start to drive and grow its revenue much, much, much higher than it is today. And it's very, very early stage. But I think we're kind of reaching the inflection point, not yet, but soon, where everyone's going to want to use the DA for Celestia because they're creating sort of an interoperability standard. And so I'm really bullish on what Celestia's built. And I think over the next year, it's going to start to become a little bit more obvious in that world. And so that's the thing I'm kind of most excited on outside of Maker. You mentioned we bought Maker at $900. This was just like last month. And they're a stablecoin provider and also a way to get loans on your ETH, Bitcoin, et cetera. So one of the best and most longest standing DeFi projects. And they have the highest yield you can get in terms of risk reward for stablecoins. Well, they about last month, there was a point where it just got sold off so bad, down to like $900 basically. And they were just about to launch buying back their own token. Their fundamentals have been doing so well. Their supply of their stablecoin went from like 5 billion to almost 10 billion in like a month and a half. It's like everything looks really good over there. And yet somehow the token was just plummeting. It was wild. And so I was like, okay, I'm buying Maker at size here at 900. And when ETH and Bitcoin and everything dumped over the last 2 months, it went from 900 up to 1,700. So it was a great buy. Now it's back down to maybe 1,200-ish. It's obviously very volatile. It's quite small, but still. Yeah, and it's grown during a time where everything else has gone down 30%, right? So I think, again, as market comes back, which could be, soon, could be in a couple of months, I think Maker's going to do extremely well as people start to realize this asset's probably very underpriced. So those are the two things that I am most excited about right now. I don't think you will do 100x though. Let's clarify that.
100x. Hopefully. I hope everybody's taking notes. I'm taking notes myself. Of course, when we finish the episode, we will get all the good uses. We get some reels and stuff. Because, Kyle, this has been amazing. But I have a couple more questions because you are doing something very remarkable. Like you make bold calls in public, I want to understand, because you're not, like, let's say, an influencer or anything like that. You are responsible of one of the biggest, if not the biggest, newsletter in the world for crypto, So how you handle public predictions and pressure? Like, how do you handle the pressure when markets down move in your favor? And what lesson have you learned from the time you, for example, if you were ever wrong,
Yeah, great question. Especially in crypto, people are very unforgiving, let's call it. And when prices go down because it's so volatile, people are like, oh, you told me this thing was going to go to 1 million and I bought, FOMO'd in, whatever. I think, so there's a few ways. One, I try to just be very honest in these and say like, look, I don't know that it's going to go to 100x. I'm not trying to like, I think there's a lot of people out there that have big accounts that are like, this thing's going to go 100x, even though they know it won't, but they think that'll get other people to buy so they can then sell the token on these people. And that is something I never try to do. I just honestly come out and I share my thesis. If you look at my Twitter right now, I've got a bunch of threads going on where I'm asking people questions like, hey, I'm thinking about this. How am I wrong? So I often have these conversations on podcasts where I explain my thoughts and then I try to like figure out where I'm also wrong in these. And so I think people start to go, okay, he's not just aimlessly shilling things. He's, he's thinking through, he's building a thesis, but he's not guaranteeing this is going to happen. Right. I try not to do price predictions because that's where people will tie it to something where you got it wrong. So I try to really over explain, over communicate kind of what my thesis is and what I'm thinking. And that tends to, I think, build a little bit more trust and maybe have a little bit more leeway where if I'm wrong, it's like, yeah, okay, well, you said also the bear side to it, right? So like, you didn't say this was for sure going to happen. So that's a big thing. I just try to be really open. I never get stuck to like one asset or one ecosystem. Like I'm not just a perma bull on whatever. I'll change my opinion and I have no fear of changing my opinion because crypto changes fast. You should change opinions. If you don't change opinions, then you're getting left behind. And so I think it's just a lot of just really trying to be open and transparent about how I'm thinking about it, not just saying, I think this token goes here. It's like, here's why I think that, but this might not actually happen. So like, so it's just a lot of like over explaining really.
I like that what you just said about changing opinions is normal, especially in crypto. But also very important is building in public and being transparent. For example, Mirror is about sharing insights transparently. That's what you do, guys. How has building in public helped your brand? And do you think more investors should share their strategies openly?
Yeah, I mean, it depends on your industry. Obviously, if you're building like a piece of tech where you can't have your competitors know, like you probably want to keep that quiet. I think the main point that people need to understand about building in public is it's all about building community. It's getting feedback from your audience. It's learning what they need, what their problems are. With Milk Road, we built a newsletter. We had a big audience. We have a podcast. We have a big audience there. And now we want to build products for them. So Milk Road Pro was one of them that I talked about. That's a product that is built specifically for our audience to keep up on markets, to see our portfolio, to get more indicators on where we're at in the business cycle, et cetera. And all these things were built basically just by asking our audience, what do you guys need to invest better, right? Like, how can we better help you invest? And when we learn from our audience, we can start to build products for them, right? We already have a big audience. We don't need to go and find new people to use the products we create. We just create products for these people. We find out what are their challenges, what are they struggling with, and then we build things to help them navigate that. And so building a community is really, really useful because it's your feedback mechanism, right? It helps you to understand what you should build and what you should do and what content works and what content doesn't work. And so that's huge and something we've really, really focused on at Milk Road. So we have Discord channels with our pro members. We have Telegram channels with our podcast. Like these are all just there to communicate with our audience and learn from them and use them to help, build things for them. And so I think in that sense, it makes a lot of sense to include your community in everything, right? Build those relationships because they'll help you build the products you need. So I think that is a huge, huge, huge benefit to any company, to be honest. But in terms of building in public, like that depends. I think if you're building a piece of tech and you might not want your competitors to know, that's fine to keep that private. You don't have to tell everything. But I do think building a community is one of the most important things you can do because that is a moat. We talked about moats a lot in this podcast. And on the internet, not a lot of companies have a moat, especially like media companies, right? It's very easy for someone to go and let's do a different podcast or read a different newsletter. It's not hard. The switching costs are next to nothing. But if you build community and people really start to trust you and learn from you and you learn from them, there's that connection. And that connection, that relationship, that is a moat in itself. People don't just like walk away from that, So I think it's huge to focus on community.
And this actually taking me to the next question regarding, let's say, building a crypto media empire. So, we live in a world right now, especially in the last 8-10 months, it got flooded with newsletters, YouTube channels, Twitter influencers. But what do you think the Milk Road stand out, and what key strategies help it grow into the most read for crypto investors?
Yeah, great question. I think the one is to know your audience and niche into that audience, right? There's, crypto newsletter is a broad term, But there's actually, if you really look at it, there's many different types of crypto news. Some are for builders, right? And they're helping developers learn to write code better and like understand what to build. Some are for retail investors. Some are for institutional investors, right? Some are for degens. So like, if you try to just create content for everyone, you're basically creating content for no one. And what Milk Road did is do a really good job of just like knowing who is our audience and who's the type of person that we want to create content for, right? And so we've just done a good job at doubling down on that and continuing to double down on that. So I would say one is like niche and like really know who your audience is, and then create content specifically for those people. And then again, build a community, right? Like focus on learning more about those people. So one of the things I did early days in our media company was I actually spent about 2 months getting on a call with all of our paid customers. So everyone that was signed up to Pro, I just got on one-on-one calls with them and I just talked to them about their portfolio, their jobs, their like why they're in crypto, like everything. And I just was like, who are these people? You know, because like online, it's not like they're coming into a store and you get to shake their hands and like close a deal with them and sign a contract. It's like they put in their credit cards, they sign up this thing, and I never hear from them or see them, right? And so to go and do that, it was one of the best things I ever did because I really got to understand who these people were and why they were subscribed to us or why they were paying for our products. And that really helped me to just like create better content and more specific content for them, which then again, that's what allows you to keep growing because you find more and more people just like that person and you become the best at that piece of content. Whereas if you just try to create for everyone, you're creating for no one and you're not really going to attract anyone.
Kyle, I have 2 more questions for you. It has to be now. Let's go back to the crypto world. Let's go about to the trading side. But just before I forget, talking about Mill Road, guys, it's not like I endorse Mill Road, but I actually am a user. You know, I subscribe to you, and everybody that asks me, where shall I subscribe for a newsletter? Where shall I get information that is quite good? I always send, even my wife, I sent her to the Mill Road to understand what was crypto. Recently, I've been trying to explain it for 9 years, and you guys explain really well in your newsletter every day. So congratulations to you. And now talking about something that happens every day in crypto, there's something that people, well, especially in bull market, people get overhyped, right? What do you think is the most overhyped narrative right now? So every bull run, everybody's trying to hype their narrative, right? What's the one trend or sector in crypto that you think is completely overblown right now?
Great question. It's a tough one because right now markets are absolutely crashed, and so there's kind of no narrative in the markets at the moment. However, what I would say is, let's say like go back a month ago. Yeah, go back a month ago, 2 months ago. I mean, one I had said meme coins was for a long time, and so that I think has solved itself. The other one is actually goes back to our earlier conversation, which is actually AI agents. Not that I'm not excited about AI agents. I think it is really cool. I think they are the future of what's going to happen on chain. I think AI agents will be everywhere. But I think that it got way overblown, and the expectations were that AI agents are going to change the way that we trade and do things online today. And the fact is, it's actually not today, right? It's probably going to be a year or 2 years or 3 years from now. And so it's not that I'm not bullish on that narrative. I just think what often happens in crypto is we get overexcited too soon. And then we realize, oh, these things actually take a little bit longer. It's like we talked about DeFi last cycle became the biggest thing, as you said, then it came crashing down. That was not because DeFi wasn't useful. It's just, it was too early, right? It didn't make sense back then. And now DeFi is starting to have its moment where fundamentally it does make sense. And so I think that's probably where we're at with AI agents as well.
Okay. And now this is a question I never asked anybody in the show before. So I'm going to start with you because everybody, you know, is feeling a little bit down. The market's crashing. There's more memes out there talking about everybody's going to start to work in McDonald's. But of course, you and me, we're entrepreneurs. We will thrive. But even though I'm passionate about crypto, I know it's a technology, blockchain, everything is going to survive 100 bear markets, and then it's going to stable up forever. Let's say fast forward to 2030, and crypto hasn't reached that mass adoption that we've been expecting for the last 22 years since it was created. What do you think will be the bigger reason why it failed to live up to the expectations of all the people in crypto?
That's a great question. I would say probably because one of the one of the things that happens in crypto is we have this problem of short-termism, where everyone is like, I want to make money now, right? Or I want to launch this product and launch this token now. And a lot of people in this space don't think about 10 years from now or 20 years from now. There are people that do, which is why I'm still bullish on crypto. And I think in 2030, things will work out. But a lot of this industry is all about short term. And that's why we have so many rugs and we have so much fraud and we have all these issues. And part of that is because of what crypto is, which is the ability to launch any financial asset at any time permissionlessly to anyone, right? That's never existed before. And so like, it makes sense there's going to be fraud and there's going to be short-termism, because like I could launch a token today, I could promote it tomorrow, and I could have $1 million by the end of the week. It's crazy. But obviously that's bad for your reputation if you rug everyone and you steal that money, but a lot of people still do it. And so
Yes.
we've created a bad reputation as a result of that in this industry. Now, I'm not concerned because I think there's a lot of really smart people and a lot of great builders that are thinking for the long term. And so I think we will fight through that. But I would say that's like probably our biggest like Achilles heel, or like our biggest problem at the moment in this industry.
Okay. I have two more questions from my side. Something that happened last year in November was prediction market. Polymarket came and helped to solve the whole situation about Trump and Harris, and everything's on chain and on data, and it's been working really well. And people, actually, content creators have been jumping to use Polymarket and prediction market. What are your thoughts about prediction market from the marketing point of view, but also from the crypto side of view?
Yeah, look, I think we're going into a world where we've been doing it for a while, where people love to gamble and they love to bet, right?
Mm-hmm.
Whether it's like sports betting has become one of the biggest industries in the world over the last 10, 20 years, right? It's become huge. Kids just absolutely love it. And casinos continue to be a big thing, right? Like gambling, people just love. People love to try to punt things that are going to get them 1,000x or 100x, as we've talked about. That's just how people are. And I think that's probably because to do with the times, right? It's hard to go out and find a job where you can make enough money where you can buy a house and like feed your family. And so like a lot of people are like, I want to buy lottery tickets. I want to gamble. I want to bet in sports and hopefully make some money. And so I think prediction markets are just another version of that, right? And so I think we'll continue to see adoption of that. Now, I think what is cool about prediction markets is it also is like almost like a truth mechanism, right?
Yeah.
And so if you followed the election, you could have seen that Trump was going to win, days, weeks before, whereas mainstream media was telling you something completely different, that it was this very close, tight race. In Polymarket, it was like, it's not even close. And who was right? Well, Polymarket was right. And I think we're starting to see that with a lot of things now, right? And so it's an amazing tool as an investor to go and be like, okay, I think this thing might happen. Am I right about that? Or am I wrong about that? And it's like, instead of even asking on Twitter or something, I just go to Polymarket and I'll search, like maybe there's a prediction market on it already. And you can see, and you're like, oh, wow, like here's what the market thinks. And so I think it's an amazing tool as an investor, and a really good thing for kind of like a truth seeker. And then I think it'll continue to get adoption because people just want to gamble and people have fun with it. So I see a lot of good in it, to be honest.
Let's see what happened. And then the very last question, we talk about crypto, we talk about blockchain, about the future of DeFi, about the future of stable coins, etc. But also you come from a marketing point of view, you're very knowledgeable about marketing and about content creation. Obviously, you have the newsletters, Mill Road. What do you think about AI? Okay, AI content creators. So as an experiment, I built a whole system for Andres AI. So I want to be honest, it's like 4 people, and then we have a lot of software that we've been testing since January. And the thing because obviously I have to create so much content, and the content in crypto has to be daily, right?
Mm-hmm.
But the most challenging part is the fact check, right? So how to check if the news are truth or not. Simple as that. So what are your thoughts about AI content creators? In some point, do you think we're going to have an influx of everybody is going to be AI? Everybody's going to get replaced. There's going to be more crypto brothers talking about Bitcoin to the moon, if not going to be everybody in AI. What are your thoughts about it?
At some point, probably there'll be an extension of content creators that will be AI. Right now, I don't think it's there. Okay. We also tried to build a lot of AIs. Like we tried to build a Milkman AI. We've had some clients that we've helped do this for creating content. And The problem is it still just isn't good enough. It's the
Mhm.
thing is like we couldn't get it smarter than me plus my team together, right? It could read and understand all of our past content, and it could do really well at summarizing that or sharing that or helping people find that content. But it couldn't think of like the next thing, right? It couldn't like put all that content together and like form a opinion that is like maybe outside of what everyone else already thinks, what's consensus, right? Because it's that's what it's doing. These AIs they're learning from all the data of everyone else. And
Yeah.
so as an investor, you need to think of what's not consensus, because if it's consensus, well, then you're already too late into that investment, right? And we couldn't really get AI to do that. And so I don't know exactly what happens. What we're now focused on in our companies is how can we use AI to scale the things that we do as humans, right? And so instead of the AI doing the content creation and joining this podcast for me, instead, let's get AI to go and find all the data for me, right?
Yeah.
And summarize that for me. And let's go get AI to like read the earnings reports of Coinbase and Robinhood and like summarize that for me and help me like create more content and do more things. But ultimately, it's more like what I see is right now anyway, AI makes superhumans. It doesn't replace humans. Now, at some point,
Yes.
that changes, I think. I don't know when that's going to be. I hope it's still farther away. At some point, it probably does get smarter. The only thing I would say is I don't know if anyone has followed a bunch of the AI agents on Twitter at all. I don't really enjoy it, right? Like these things,
Yeah.
they hallucinate. They don't really make sense. And more importantly, they just don't like engage like a human engages. Like we go on social media to like build relationships and
To build,
communicate
yeah.
with people. And you can tell when you're talking to an AI. It's not a very enjoyable experience, right?
Yeah.
And now again, that might get better, and so maybe I'm wrong on that. But I kind of think it's the fun. Like when you go on social media, you like the information, but you also like the humor that people bring with it, the sarcasm, and like all these things that AI doesn't really have yet. So I don't think AIs will replace content creators yet, but that could
It
change
can help.
by
It can.
2030. Anything can happen.
Actually, Kyle, I'm going to give you a present to you on the Mill Road team. We're going to use AI to translate this podcast into Spanish because we're going to launch our
Very
community
nice.
in Spanish in
Nice.
April, at the end of April. I'm from Colombia, and the other person, Crypto is from Venezuela. So we're going to do that for you guys, so you can reach out more people, and we can do something together with the Mill Road and the Crypto OGs team together. Or you can say la calle de leche. Mill Road in Spanish.
Yeah, right. Love that.
Carl,
Thank you.
it has been amazing having you on the show. Thank you so much for being here and to bring all the knowledge and all those tips that you gave us. I took a couple of notes for me and obviously for all the crypto G's. And to everybody watching the show, thank you so much for being here. And the very last question, is that your dog there been sleeping all this time?
It is a dog back there. Yeah. It's actually my parents' dog. I'm babysitting this dog
I
while they're
was
in
looking at the
Florida.
dog. I said, it's a cushion. What is that thing? I thought it
It's a
was a part
dog.
of the
Yeah.
screen. It's
Western
a dog.
Terrier.
Kyle, thank you so much. And I'll see you in the next episode. I'll see you in Dubai, or I come to Canada to visit you. You know,
Very nice.
you never know.
Thank you so much. I
Take care.
appreciate it.
Bye-bye,
This is a
guys.
blast.